Londra İstanbul hattında piyasalara özel bir parantez açıyoruz. Bu bölümde Ekonomist Timothy Ash yayın konuğumuz. Hi Timothy, welcome to our show.
No, thank you. Great to be here.
We last had an interview with you in September, and we were talking about the jumbo cuts of Fed actually then. And since then, a lot has changed in the agenda. My first question will be on Turkey. Let's have a balance sheet of the first 11 months. Do you think that the good Turkey story is still alive?
Well, I think it's pretty amazing where we are. You know, if you go back 18 months, I was worried about a systemic crisis in Turkey, really because things were so bad. You know, a central bank with net international reserves of minus 60, that's a central bank almost bankrupt, frankly. You know, I was worried about a banking crisis, a sovereign debt crisis, and a balance of payments crisis, right? Now, 18 months on, central banks built reserves by over 100 billion. They've reduced the KKM, the Protected FX Deposit Scheme, also by about 100 billion. Remarkable that they've been able to build reserves at the same pace. You know, CDS is lower, confidence generally is higher. We've had rating upgrades. I think the confidence in this team is pretty strong. Foreign investors have returned to the Turkey trade, particularly in credit, so hard currency debt. Foreign investors have been going long lira again, which is pretty remarkable. We've seen massive de-dollarization. That's all really, really positive. I mean, I guess the challenge now is really inflation. That's the really difficult battle, right? And we've seen the easy cut from 70% to 50 or sub 50. It's going to be really hard now, I think, to get inflation significantly lower from here without a growth give up. That's the challenge for Turkey, I think, now. Can Turkey reduce inflation without significant slowdown in growth?
So the hard part starts now for Turkey?
Well, I think so. Next year, important will be the minimum wage increase decision coming in later next month. Obviously, fiscal policy this year wasn't very supportive of the disinflation story. I mean, the deficit was about 5% of GDP. Obviously, early last year, we had the pension changes, which were very inflationary. The minimum wage hike also was very high. We had the continuation of the earthquake-related spending. That didn't really help the central bank. Hopefully, in the year ahead, we'll have tighter fiscal policy, a reduced deficit. Mehmet Şimşek is talking about a cut in the deficit from 5% to 3%. That should help the central bank. Hopefully, the minimum wage increase will be lower than 30%. 30% has kind of been given as the level. If it's beyond 30%, I think there's no hope in reducing inflation, right, frankly. I mean, I think it's going to be very challenging for the central bank. So the minimum wage hike needs to be something lower than 30% on the assumption that inflation will fall in the year ahead. So that will certainly help the poorer sections of the population if that happens. But, the question mark for the market is really at the moment whether or not the central bank will move quickly or early to cut policy rates. And, that depends, I think, on fiscal policy, on minimum wage increase also.
I mean, after the recent inflation report, the market started to expect a rate cut in December. So actually, the inflation is still monthly around 3%, and CBRT upgraded the forecasts, but still a rate cut is expected, even though the central bank didn't give a clear signal on that. Why do you think the market started to price in a rate cut?
Well, I think they read between the lines of the commentary from the various, the governor and the deputy governors, what they were saying and the messaging around it. Look, if I'm an economist, if you show me the numbers of Turkey at the moment, right, the inflation numbers, so the exchange rate, balance of payment story, and you ask me where policy rates should be, I would say they should be around where they are, and I wouldn't advise moving quickly to reduce policy rates. And I mean, look at expectations. Expectations are very elevated month on month. Inflation, again, as you mentioned, is still pretty elevated. The assumptions are that the month on month will show something of an increase in January. I wouldn't move early. If I was the central bank and policymakers, I would hold policy rates as high into 25 as long as I could, perhaps certainly till the first quarter, later into the first quarter after we get those January numbers out of the way. Because in the end, look, there are no easy choices for Turkey at this stage, right? Disinflation will require something of a growth slowdown, right? And the sooner you do it, the better. The sooner you deliver that hawkish policy, the sooner inflation will fall, and it could fall very significantly at the end of 25 if you continue to stay the course of tight policy.
Okay, so when do you exactly expect the beginning of rate cutting cycle? Which month?
Well, I before the inflation report meeting, I was at the IMF. I heard the message from the various policymakers, Turkish policymakers at the IMF meetings. I mean, the message was pretty hawkish at the IMF. So I assumed later, probably March, was my first. But then, obviously, I listened to the inflation report. I read commentary from various Turkish economists, etc., around the commentary. And I'm less sure now, I have to say. But I think it would be wrong decision to go early, right? I mean, I think it would delay the disinflation. It will keep inflation higher for longer. And in terms of the political cycle, if Erdogan is we know inflation in Turkey is the number one issue, right? In terms of elections, we saw that in the local elections. If Erdogan has an eye on elections in 27, 28, perhaps, you need to get the pain out of the way early, right?
Okay. What about this Thursday? Do you expect to hear a clear signal for a rate cut this Thursday from CBRT?
I think it would be a mistake if that happened. I think they'll need to wait for the minimum wage decision. If we see a pretty hawkish decision around the minimum wage, right? I mean, if it's 25%, for example, if that's the decision ultimately, and the central bank have assurance from the politicians that it's going to be a disinflationary minimum wage increase, that maybe that will give them more scope to move early. But there are a few moving parts here. Monetary policy is only one of them, right? I mean, the minimum wage, incomes policy, minimum wage, fiscal policy, what Şimşek's going to be able to do, the global environment as well. There's lots of uncertainties out there. Obviously, Trump election, dollar's been rallying. That's bad for EMFX generally. Uncertainty about China, trade policy, war in Ukraine, all those issues that are not really resolved yet and could still shock Turkey. So, and in the end, look, it's about inflation, right? Does the inflation story so far suggest that there's scope for an early cut in rates? I don't think so.
Okay. What about Trump? After Trump 2.0, do you think Turkey shall prepare itself, change any policies, any teams, and anything? What do you expect after Trump and Turkey?
Well, I mean, it's interesting in the market. There's a lot of wishful thinking that Trump 2 will be, soft, that there'll be guardrails and the adults in the room. I mean, look, I think it's a question, you've got to read his lips, right? And look at his hires. The people that he's, Gabbard, Kennedy, I mean, these are pretty hardcore MAGA people, right? And, he said during the election campaign, I love tariffs, right? So we should imagine a worst case scenario. We should imagine a worst case scenario where, he's very aggressive on tariffs. What does that mean? Strong dollar, US policy rates probably won't be able to be cut as much. Maybe even increased. That's generally bad for emerging markets, bad for global growth, but bad for global trade, bad for EMFX. Now, as we saw in the first Trump presidency, Trump is a fairly volatile character. We had obviously difficulties in the geopolitical relationship between Turkey and the US at times. But I think the Erdogan administration learned a lot from that. And I think there's a core personal relationship, I think, between Trump and Erdogan. I think Erdogan understands how to play Trump. He understands how to play Trump. And I think many people around him, I think Foreign Minister Fidan also has lots of relationships into Washington as well. So I think the team is pretty well prepared.
For Trump.
And I think for Trump, I think Turkey brings a lot to the table, right? I mean, it's a significant military player in a difficult region. both in terms of what's going on in the Middle East, but also what's going on with Russia and Ukraine. For Europe, it's a key player also. I mean, if NATO is going to be undermined by Trump, then Europe will need allies, strong military partners like Turkey to assure the security and stability of Europe itself. So, Turkey has some leverage.
So at first glance, a short answer, please. Do you think Turkey will benefit from Trump presidency?
I don't know is my short answer. It's going to be a challenging. It's certainly going to be challenging playing the Trump administration, right? I mean, we're quick to forget, but I mean, remember the first Trump administration was crazy almost every day. It was like a pantomime every day, and I don't think we should imagine anything different, right? Policy made on the hoof. I think we have to expect strong tariff response, difficult relationships with China. Turkey probably needs to diversify its relationships more generally. I mentioned Europe. Obviously, there's been a reach out to China recently, which is quite interesting, given that the MAGA and hardcore Republican Party characters don't like China, right? I mean, China is in the crosshairs. How Turkey plays that relationship will be quite interesting.
What is the biggest risk and what is the biggest opportunity for Turkey?
Well, maybe in terms of the China, opportunity, I would say, given the security risks with Russia, Ukraine, there's an opportunity to reach out to Europe, right? Mm-hmm. I think, and the UK as well. I think, there are common interests there in terms of security partnerships. Turkey can exploit, Turkey is a major military player in the region, right? It can extract things like a better customs union, I think, from the European Union, because perhaps Turkey can help Europe with its security concerns around Russia.
Yes.
The China relationship may be, more focused on nearshoring, offshoring. Turkey's shown itself to be it's got a strong important manufacturing base on the military industrial complex. Again, that's a huge opportunity. Europe is going to be spending a lot of money on defense going forward.
What about risks? What about the risk?
Well, the Middle East, obviously, the Israel-Iran relationship. Trump says to everyone that he doesn't want wars, but everyone he's hired in his new administration, look at Huckabee, I mean, the new Israeli ambassador to Israel, they're all Iran hawks. And I think we've seen a change in Israel itself, right? I mean, hard right Israeli government, I think brimming with confidence after what's happened in Gaza and Lebanon recently, eager to resolve the long-standing issues around Iran. Is there going to be Iran-Israel-US war? I mean, that would be obviously very bad for oil prices. Turkey's a big energy importer. That would hit the current account position, obviously impact on the lira as well.
Okay, Timothy Ash, thank you so much for joining our program.
My pleasure. Good to speak to you, yeah?